Today, Andreessen Horowitz doubles down on its claim that Ethereum is the top blockchain network. South Korea investigates crypto exchanges after Terra's meltdown. And what does UST's collapse mean for stablecoins going forward? Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto markets are bouncing back after yesterday's declines. By noon Eastern, Bitcoin was right around $30,000, Ether was at $2,000, and Solana was worth about $55. Let's talk about today's top stories. First up, Andreessen Horowitz just dropped its first State of Cryptocurrency report, and they addressed the concerns around a crypto winter right off the bat. The VC firm says that crypto markets are cyclical, and those companies that are building on blockchain technology will be a source of optimism when the dust settles. Andreessen also said Ethereum remains the clear leader in Web3 development, which the VC firm is pouring billions of dollars into, but it's facing stiff competition from the likes of Avalanche, BNB, Solana, and more. Speaking of Web3, some major players in NFTs and blockchain gaming just showed up on the 10th annual CNBC Disruptor 50 list. Blockchain.com, Dapper Labs, and MoonPay each claimed a spot on the list. This year, CNBC's focused on companies best positioned to innovate amid market volatility and economic uncertainty. If you want to learn more about each company and all the others on the Disruptor 50 list, head over to CNBC.com. Finally, in the wake of Terra's meltdown last week, South Korea is launching an emergency assessment into crypto exchanges. According to South Korean news agency Yonhap, officials have asked exchanges to hand over information regarding closing prices of Luna and UST, trading volume for the cryptocurrencies, and relevant investor data. Yonhap says around 200,000 South Korean investors bought into Terra's crypto offerings. Pretty much everyone is trying to make sense of what's next for crypto and stablecoins specifically after Terra's collapse and scramble to recover. For our main story, I spoke to Omid Malekan of Columbia Business School about what UST's crash means for the stablecoin industry, whether regulation will come sooner, and more. So to start things off here, there are multiple ways to design stablecoins, some riskier than others. And can you tell us, what potentially made Terra's riskier than others? And are there any lessons learned here?
Terra was built on this so-called algorithmic model that has been tried many times over the years and almost always failed. And what makes it riskier is that unlike, say, a vanilla fiat-backed stablecoin that's just backed by ideally cash in a bank, an algorithmic stablecoin is backed by a cryptocurrency whose primary reason for existence and source of value is the fact that it's the thing that issues a stablecoin. And the synergy between these two different assets, it's like a virtuous cycle when things are going well, but can then become vicious and turn into a death spiral when there's suddenly loss of confidence for any reason.
And a lot of the interest around, Terra has been because of the personality around Terraform Labs CEO. And so do you think that that played any type of role in the rise and fall of both Terra, USD, and Luna?
Definitely. It's almost like a Icarian story where even though algorithmic stablecoins are sold as being more decentralized than other stablecoins, in this case, Do Kwon, the head of Terraform Labs, had a significant amount of hard and soft power, almost like a cult of personality, which is both what attracted a lot of people to Luna and UST. But then again, when things started going wrong and suddenly Do Kwon was silent, it led to the overall loss of confidence that led to the collapse.
So how big of an impact do you think Terra's collapse will have on stablecoins broadly, but also algorithmic stablecoins specifically?
So I think algorithmic stablecoins as an idea are dead. There are other ones out there, not as big as UST, and they're all in some state of a run or failure to maintain the peg right now. On the one hand, that failure has sort of made the other more conservative stablecoins like the fiat-backed ones seem very appealing in comparison. But the open question now is also what kind of a regulatory response does the entire industry get? I think the fiat-backed stablecoins like Tether, USDC, etc., which have been around for a long time. When you add them up, they actually account for a lot more adoption than something like a UST. And even in the last few weeks, while USD plummeted, crypto prices in general have been going down. The other more traditional stable coins, from all reports, have been doing just fine.
And you mentioned regulation. There's been chatter on Capitol Hill for some time that stablecoins need to be regulated. And do you think that this moves up the timeline for some kind of legislation? And what would that ultimately look like?
I think it actually probably significantly speeds up the timeline just because of how big UST was and then how quickly it failed. As to what the legislation looks like, this is being debated within the industry, and there are two schools of thought. One is that we're just going to get a draconian crackdown on all kinds of stablecoins to the extent that they just become difficult to use. The other school of thought is that it is this vacuum of sensible regulation that leads to experimentation with riskier models like UST. Perhaps this will motivate regulators to give more palatable regulations for the more conservative approaches to stablecoins in order to help them sort of win and take total market share.
And does the threat of regulation or possibility, maybe to some, does that change the investment case at all for the industry?
In the short term, perhaps, but in the long term, I actually think that the more regulated crypto becomes, the more it helps the overall investment thesis. Because as you know, most of the world's capital is controlled by institutions, not individuals. And institutions as a group are generally wary of entering markets that are not regulated.
And finally, we've seen lots of investors fleeing, not just Terra USD, but Tether as well. So how has this affected the reputation of these types of investments long term?
So there was a temporary depeg of Tether at some exchanges, and we've also seen, interestingly, the overall supply of Tether has shrunk since the UST debacle, and that seems to have come at the benefit of the more transparent, sort of more trustworthy stable coins like USDC or BUSD. So I think it's possible that this is the beginning of a rotation from the entire crypto investor community to more trustworthy and more reliable stable coins, even within the fiat back basket.
Before we go, Congressman Josh Gottheimer reacted to Terra's collapse on Squawk Box this morning. Here's what he said.
What was very concerning about last week with Terra and Tether and others was the quick run on the market. And what many of us have been concerned about and working, frankly, with those in the space, innovators and entrepreneurs, is how do we give some more certainty to the marketplace and ensure that when you have a stable coin, it's actually qualified, and that's what my legislation that I'm working on does. It says it should actually be backed by US dollars or equivalents, so you know what's behind your stable coin. And so it prevents runs on the marketplace, and that consumers who are in the space don't suddenly find themselves with nothing in a matter of seconds.
That's all for Crypto World today, but we are back again tomorrow, and we'll see you then.